The stock market, the collective wisdom of all of the individual market participants. How could they possibly be wrong? Ladies and gentlemen, welcome to the Fiscal Philosophy YouTube channel. As you know, I like to consider myself something of a value investor, meaning I believe that in the short run, the falls in different stocks prices can in fact be perhaps inefficiencies in pricing in the market, not really taking into account the long term, but more based on short term fears. Now, Intel has in fact suffered pretty badly this week with some less than wonderful guidance that they just released on their earnings. They basically are going to be guiding lower than what Wall Street analysts' expectations were for Q2 revenue. Now, this also comes after they announced certain losses in the Foundry business as they started separating out the financials a little bit more. And basically, they stated that 2024 probably would be the year that would have the deepest losses in Foundry before starting to improve in 2025. Now, this combined with the softer guidance for Q2 has just sent the stock on a bit of a spiral. Now, I think it's also important to mention that Intel is a major holding of mine, and just because I hold it and have these opinions about it doesn't necessarily mean that it's a good fit for everyone out there. So, without much ado, I'll get into why I still continue to hold it and why I think that these reactions are potentially overreactions. So the first thing that I think is really driving this stock price decline, or the thing that kind of started it a while back, was this loss that they reported in the Foundry business, this operating loss. Now, this is something that is in the building stages still. This is one of the most capital-intensive businesses pretty much in existence, right? And the build-outs are necessarily long. They take years to complete these massive projects. And Wall Street, unfortunately, views things mostly on a quarter-to-quarter basis and doesn't really see much past the next couple quarters in most cases. With the scale and scope of this, it makes sense that while spending tens and tens of billions of dollars building out these facilities, as well as hundreds of millions of dollars per machine for the newest ASML machines, that there would be growing pains along the way. Anyone getting into Intel should logically be able to come to that conclusion and not be surprised when not every quarter is a banger on the financials. That being said, they are expecting in a few years to have the build out be more or less complete. Singer saying this year is the trough. Now, I would just slightly beware of that because there was one point where he said something like the bottom was in, and then the next results came out and it was still pretty darn bad and the stock went lower. So let's not necessarily take this as gospel when he says something is the trough. And don't get me wrong, I like Pat Gelsinger a lot. I think he's very smart. I think he's doing a lot of good things. But sometimes these kind of calls where the bottom is in, it's the trough, the dividend is healthy and competitive, sometimes he puts his foot in his mouth a little. Also, another tough pill, I think, for Wall Street to swallow is this break-even in 2027 deal. When you're always chasing the next quarter, and it's currently 2024, 2027 seems like an eternity away. And again, that's only break even, not astronomical profits. However, since the build out, I think, will be mostly complete at this point, the Foundry will be breaking even, and some cash flows and earnings will start to return, hopefully, for the other parts of Intel. What you might see is a return to a more or less normal cash flow. So, I think the first consideration is what is the earnings potential for Intel in the next few years. Now, yes, 2023 was a hard year to hold Intel. I held on I was steadfast. 2024, better than 2023, but still rough. And the analysts, the very small number, so grain of salt, that cover it out to 2027, have it basically returning to 2021 levels. That would be fabulous. Okay. This would be 6.5 times today's price. The question I suppose I pose is, would a company that I believe is going to be viewed as a chip making leader going to only command a 6.5 times multiple? Heck, let's assume that it's not as good and maybe they only get to $3, right? That would be a little bit, that would be like maybe what, 11 times today's price. Do leaders in chip making get 10.5 or 11 times multiples in the market? I say no. If they do somehow to trade at such cheap multiples, I do expect them to reward us with frothy buybacks, by the way. But I'd like to get into a little bit of why I think they could very well be viewed as a leader by this point. So first, let's talk about Foundry. They have a pretty ambitious plan, and TSM has a pretty big moat, but they do expect or claim that they will become the world's second largest foundry by 2030. So they'll be break even by 2027, likely scooping up additional market share by that point, and on a certain trajectory. I think if by that point they're both not taking losses anymore and they're taking market share, people will pretty much have to take them seriously. And if it looks like they're on track to hit this 2030 number 2 placing target, all the more so. If we say that TSM is the Coca-Cola of Foundry, well, in that case, Intel is simply aiming to be the Pepsi of Foundry. Now, just because Coca-Cola is, in my view, and in the view of most cola appreciators and aficionados out there, doesn't necessarily make Pepsi a bad investment. In fact, if you had chosen a good time to invest in Pepsi, you would probably be doing very well right now. And I view this as much the same. So I also think that the CEO, one of the central figures of this story, does not get quite enough credit. What do I mean by this? Well, I think he is viewed as a little bit of like an awkward, maybe geeky dweeb sort. And I think that because he lacks like sort of the weird charisma that some other, sort of visionary CEOs have, or because he's not like some kind of a, cult worshipped, social media persona like some others, that people just aren't as cultish and dedicated to Intel stock. I think, for example, you could argue that Intel under Gelsinger has delivered more consistency in terms of certain developments in their business, and as far as timetable, etc., as well, as compared with something like Tesla. But because Elon Musk is so much more popular and has such a following, it seems like Tesla stock gets propped up to an extent that Intel stock just can't seem to compete with. And that's just like I think it's just a personality thing where Gelsinger just doesn't have that whatever presence that Elon has. When you consider all the work involved in both keeping 5 nodes in 4 years on track, plus all of these multi-billion-dollar construction projects they have going in building out the foundry business, plus acquiring and putting into service the very expensive, very high-tech ASML machines, there is a lot of moving parts to this plan. And the fact that Gelsinger seems to be handling it all, I think is really impressive. And there may be more growing pains along the way, but I do think that Intel, along with Gelsinger, are probably up to the task more likely than not. Now, if you like this video, Make sure you hit the like for the algorithm, subscribe to the channel for more of this content around different stocks that I own or that I'm watch listing or looking at, prices I might be thinking about considering paying for them. Join the Discord link in the description. Also, catch me 8 p.m. Eastern Time every Saturday night on Cashflow Kings Live. Link in the description there as well. Consider becoming a channel member if you want to support the channel more directly. Take care, everybody. Have a wonderful day.